Hello, good morning, ladies and gentlemen. And how are you doing today? Hope we all had a wonderful weekend. Well, I'm so excited to welcome you to yet another promising session and welcome to another morning live session with me as we take a fresh look at the market for the new week. And like I said during my previous sessions, this session was born last week, and one thing I that made me instigate this is the fact that it helps make us document our our plans for the week. So during the course of the weekend, I was able to publish, I think, four financial instruments. I was able to publish the USOil, the GBPUSD, the USDJPY, and the XAUUSD. So these are going to be the pairs that we are going to be monitoring for the week. And if you are with me on my TradingView platform, you would have seen that I have made some updates on the pairs that we published, and I have told us how we are going to be anticipating any price movement for today. Now, before we go into the details on the chart, it is very important that we look at the economic calendar, as today is laced up with some macroeconomic events that will definitely be bringing some liquidity into the market. And look at what we have here. So on the economic calendar for today, we have three macroeconomic events. That is Monday, February 27th. And the first one we have here is a speech from the Bank of Japan's governor's nominee, that is Hueda. And though we still do not have a time frame for this event, but I hope with time this will get updated in that regard. So we'll continue to check on this to see when the Bank of Japan's governor's speech is going to be coming up. Then the other one we are looking forward to here is going to be affecting the US dollar, and that is the durable goods order for the month of January. And if we look at the previous data here, we have 5.6% against the current projection of -4%. So that is quite a huge variance there if it turns out to be -4%. But we'll definitely be looking forward to this event to see the actual data that will be published in that regard. So we are going to be seeing if the actual data will be as expected, beyond expectation, or below expectation. And we're obviously going to be looking at how participants in this market will be anticipating this event. Then the last one for today is the non-defense capital good order for the month of January as well. So there is a level of positivity in the air for this one. As you can see, we have a previous data of -0.1 as against the new consensus of 0%. So we are all going to be looking forward to this, and the reason for this live session is for us to be able to use our technical skills to identify trading opportunities lining up for us. So with that being said, here let's dive into the current market structure. So the first commodity we are going to be looking at this morning is the US oil. And on the US oil here, if you look at the current market structure, and if you had watched my video on the US oil, I made emphasis on the fact that the $76 level will be serving as a major determinant of price action for this week. As like I said in the video, that if price action continues to trade above the $76 area, we shall be looking forward to buying opportunity. And if price drops below this level, we'll definitely be looking out for selling opportunity. And another thing that made this confluence here very significant is the fact that it falls within that bearish range that we identified. Remember, we have been witnessing selling momentum in the last couple of weeks on the US oil, And we had a situation last week where we saw price action break out of that trend line. And with a breakout retest of that trend line and the $76 level, this will be a beautiful opportunity to join a bullish momentum. However, when we look at what is happening here since the beginning of the week had started on a bearish note. And this was what I updated on my TradingView platform. If you see, okay, this is where it is here. So I updated this and how I go where we identify that channel. So you can see this is my update here on my TradingView platform. And we said we are going to be looking out for trading opportunity at the breakout or breakdown of this channel. So like I said earlier, we have a resistance point for the week sitting at the $76.68. This is where price action started the week. We saw the bearish momentum breaking down the $76 level, but as soon as it tested the $75.80 level, we started seeing buy pressure coming in from that area. And to further signify the importance of the support level here, you will see that it shares a beautiful confluence with that bearish trend line. And as a result of that, we saw buying pressure resume from that level. And let's see if this buy pressure will continue to the upside in such a way that it will break out of the $76.68 level to trigger our buy stop order. So we already have a buy stop order sitting above the $76.68 level here, and we also have a sell stop order sitting right below the structure. So each way, whatever way it happens, a breakout will be triggering a buy position and a breakdown will be triggering a sell position. And this lines up with the expectation we set in that video that if price action trades above the 76, we continue to look out for buying opportunity, and below the $76 area we will be looking out for selling opportunities. So let's see how this is going to be playing out in the next couple of hours, and be rest assured that I will be jumping the comment section of the US oil on my TradingView platform just in case there is any surprises that comes up in the next couple of hours. So I will be doing an update in that regard. So if you do have any questions, feel free to drop your inquiries in the comment section. Before I move on to the next pair. All right, so the next pair we are going to be looking at this morning is the USDJPY, and on the USDJPY too, we have been, remember last week's trading session was quite a profitable week for us on the USDJPY, as we were able to scoop I think over 500 pips on this one as we rode the move all the way from the 134.150 level to the upside here. And one thing we have observed here is that price action, as soon as it broke out of the 136.00 level that was on the last trading day of last week, we saw that as soon as price got into the 136.550 level, we have been witnessing selling pressure from that area. And in fact, this is characterized since the beginning of the week too as well. We've been witnessing selling pressure from that area. And what we notice is that price appeared to have done a retest of the 136.00 level, a level which was broken during the course of the last trading day of last week. We saw price action coming back into the structure, and one interesting thing we see from this level is buying pressure, price action rejecting that level one more time. So will this turn out to be a trend continuation pattern where a breakout of the 136.550 level will be triggering our buy position in anticipation of a potential trend continuation to the upside? So this is one of the scenarios that we are going to be looking forward to this morning. And so we have a buy stop order sitting above the 136.550 level. Now, the other scenario that we are going to be looking forward to here, and considering the fact that we had this impulsive move that started here on Friday around the 13400 level, we saw this impulsive move, And normally from a technical standpoint, whenever we cite an impulse leg like this, there is a likelihood that price action will be going through some retracement at one point in time, as those who are taking advantage of this opportunity here will definitely want to be doing some profit taking activities, which will be reflected on the chart as a retracement phase into somewhere around our golden zone area. But if we look at the current structure we have in the market, and if price action breaks down the 136.00 level, selling pressure below the structure could bring price back into structures like the 135.300, the 135.00 area, and both of the structures shares a confluence with that bullish trend line. If you remember what I said during the my publication, the video I shared during the weekend on the USDJPY, I shared an important structure on the 4 hours time frame where I was able to identify an ascending channel, which I said might be guiding has been guiding the bullish momentum since the beginning of this month. As you can see here, we saw our price action has been finding higher highs and higher lows in that regard. Now within that channel, we have a couple of trend lines which actually demarcated the upper part of the channel from the lower part of the channel here. Hold on a second, let me show you what I'm talking about here. So we have this trend line here, and what you will notice here in the last 1 week is that price action has been trading at the upper half of this channel to emphasize the strength of the buyers at this point. So like what I was telling you on the 1 hour time frame, that if we do see price action break down the 136.00 level, it will definitely be the incitation of a retracement of that previous impulse leg, which I said could culminate at the 135.300 or the 135.00 area before another wave of bullish momentum will happen. So even if price drops below the 136.00 level, it doesn't negate the bullish buyers we have on the USDJPY. So it might likely be a retracement into a structure, and if we start seeing buy pressure resume around this area on our lower time frame, then definitely we will be anticipating a potential trend continuation. However, if this does not happen, that is, price does not break down the 136.00 and instead it climbs up, break out of the 136.550, then this structure here would have transitioned into a trend continuation pattern and get our buy position triggered at that point. So let's be on standby to catch either of these opportunity for today, and be rest assured that I will be jumping in the comment section on my TradingView platform if there are any updates or any strange evolution of price action. So that is that on the USDJPY. If you do have questions, feel free to drop your inquiries in the comment section. So the next pair we are going to be looking at this morning is the XAUUSD. Now on the XAUUSD, I told you how much we have been on the bearish momentum in the last I think, let's see, okay, since the beginning of this month, price action has been bearish. I think we cited this on the 4 hours time frame right in that video which I shared during the weekend. And one significant thing about this structure is this bearish zone that we have here. So you can see our price action had continued to find lower highs here to give us that resultant bearish trend line, and this further emphasizes the strength of the sellers in this market. Now with price action dropping back to where it started the year, let's zoom this in so that you can see things more clearly. So like I said, this is where the new year started. The new year started on a bullish note after price action broke out of the 1,820 level. And one thing we noticed here is price action had broken down that structure to the downside during the course of last week's trading session to signal that sellers might likely be coming in this market. So we have a key structure around that area which falls around the $1,820 level, which is a strong demand zone in the past. And if we extend the bearish trend line further into the current structure, you will see that it shares a beautiful confluence with that 1,820. And we all know that from a technical standpoint, whenever we cite a breakdown of a structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure to incite another wave of bearish momentum to the downside. So this is one of the scenarios we are going to be looking forward to, and that is in case price action continues to climb to the upside back into that demand zone that was broken last week, and an area also which shares a confluence with that bearish trend line. Then we look out for selling opportunities here on our lower time frame to join that decline to the downside. Then another thing that could happen here following the breakdown of the 1,820 level is that we could have a situation where price action will transition into a trend continuation pattern. It could be a bearish rectangular pattern, breakdown retest of structure, then it continues to the downside. This is another thing we are going to be looking out for this week. Now, if we scale down to the 1 hour time frame to see how participants in this market has been reacting to this current market structure, this is what I was able to identify here on my 1 hour time frame, and I shared this earlier this morning, as we were able to identify a channel first of all between the $1,814.50 level, which appears to be the resistance point for this week so far, as this is the highest point price has ever been for this week. Then we initially had a support level which lasted about 6 hours before this breakdown of the support level happened at the $1,810.50 level. Now, with the situation we have here with the channel here, you all know what we look out for whenever we cite a channel like this is to wait out for either a breakout of that channel to the upside to give us a buy opportunity, or a breakdown of the channel to the downside to give us a selling opportunity. And we already have a signal here in the form of a breakdown of the 1,810 level, which actually happened during the early hours of today. But one thing we have observed here is that as soon as price got into the $1,806, I think $806.80 level, we started seeing some buy pressure resume around this area. So for the sake of this session, let's quickly identify this. So we have it at the $1,806. How many cents is that? Or should I call it $1,807? Let me round it off at 1,807. So we have that level there. So we might likely extend this channel to something between the 1,814 and the 1,807, depending on how this plays out. Now that we are within the the UK session right now, and I'm citing the buy pressure that has resumed right above the 1,807. I am of the opinion that the breakdown of the 1,810 level could likely be a false breakdown, and this will only be confirmed if price action does break out of the $1,814.50 level. Remember, this is the resistance point for the week. This is the highest point price has ever been for this week. So if we do have a breakout of that structure, then we'll definitely want to be joining a counter trend opportunity. And like I showed you on the 4 hours time frame, this could likely turn out to be a move that shall be a retracement of that previous impulsive move back into the zone where we shall be looking out for selling opportunities. So if you are comfortable taking counter trend opportunities, you might want to be joining right above the $1,814.50 level rather than the move all the way up to the upside. and this has a tendency of giving us between 800 to a maximum of about 1,800 pips on this one. So like I said, if we trigger position above the structure, then we continue to add more position. If price action breaks above the 1,820 again, we join the rally to the upside. And please ensure that you continue to move your stop loss accordingly to secure your current position. Remember, this is a counter trend opportunity, and there is a likelihood that price action could evolve into a selling setup. So we want to be on standby to always ensure that we move our stop loss to secure the current position. So we have an area around here where we'll definitely be looking out for selling opportunities. It could be around the 1,820 level. If we start sighting selling pressure below that structure, then we want to be joining a decline to the downside. But if it breaks out of the 1,820 level, then above the 1,820 level within the bearish range we identified here, we can be looking out for another selling opportunity around that area. So that is one setup we are looking forward to here. Then the other one is if it so happens that price action drops back below the 1,810 level, well, at this point I would not join the decline outrightly, as I would need to wait for price action to do a retest of structure, and this will be giving me more confirmation that we might be seeing a selling opportunity. So if a retest of structure happens, selling pressure below this level on my lower time frame, then it's at this point I want to be joining a decline to the downside, and a further breakdown of the 1,807 level will be welcoming additional position to this existing trade. But at this point in time, and coupled with the buy pressure we have been observing here in the last 5 to 6 hours now, we might see a situation where price will break out of the 1,814. So at this point, a breakout of the 1,814 seems most likely based on this current market structure. So let's see how this plays out in the next couple of hours. Your buy stop or above the 1,814, and I will definitely keep you updated on my TradingView platform. Now moving on to the last pair for today, which is the GBPUSD. So on the GBPUSD, we have been witnessing some selling momentum as well since last week's trading session, and in fact we have a similar structure with what we have on the XAUUSD. Remember, we are sitting right at a strong demand zone right now, though we had a breakdown of a important structure at the 1.200 level. And you know, from a technical standpoint, whenever we do have a breakdown of structure like this, we expect that one point in time price action might likely come back to do a retest of that structure to incite another wave of bearish momentum. So this is one of the things we are going to be looking out for going into the new week. And if we look at what has been happening since the beginning of the week, we can see that price action has actually caught within a consolidation phase, just right within the 1.19650 level and the 1.19400 area, to emphasize some level of indecision in this market. And another thing I would like to call our attention to here is the fact that price action is trading above a strong demand zone at the 1.195 zone area. And following the impulsive move to the downside that happened last week, it appears price has transitioned into a double bottom structure, which is a strong reversal pattern where the 1.19650 level will be serving as the neckline of that reversal pattern. And if it so happens that price action breaks out of the 1.19650, we could have a buy position triggered here. A further retest of structure will confirm that that is a reversal pattern, and definitely we want to be joining that bullish momentum to the upside. So let's continue to wait. Let's wait for this momentum. It's more likely that price action will break out of the 1.19650 based on this current structure, and considering the fact that price is sitting right on a strong demand zone at the 1.19500 area. So let's see how this plays out in the next couple of hours. Be rest assured that I will be jumping right in the comment section on my TradingView platform to give you an update on what my expectation is going to be like going forward. So I think this is the last pair I'm going to be talking about for today. I think, all right, that is. All right, everyone, it has been a wonderful moment with you guys, and I look forward to seeing you in the comment section on my TradingView platform, and same time tomorrow morning, 8 a.m. UTC. Let's come here again to review how well the pairs that we have been monitoring so far has been doing. Thank you very much for being around. I really appreciate, and do have a wonderful and best of luck during the UK and New York session today. Bye bye.